2024 is behind us, and what a year it's been for the markets. From shocking elections and regulation overhauls to soaring IPOs and market crashes, this year kept investors on the edge of their seats. Today, we're breaking down the biggest markets movers and shakers of 2024, and let's see how investors reacted to these updates. Let's kick things off with SEBI, the markets regulator that made waves this year with two major decisions. First, SEBI introduced a stress test for mutual funds, ensuring that investors know just how liquid their investments are. With the small caps rally, SEBI was concerned that a rush of redemptions could trigger liquidity issues. Second, and even more significant, SEBI overhauled the entire futures and options market. From increased lot sizes to fewer weekly expiries, these moves aim to protect market volatility and curb retail investor losses in the derivatives segment. While these measures were controversial, their impact on market stability was undeniable. The 2024 was a mega election year, with over 64 countries heading to the polls. But three elections stole the limelight. The first, India's Lok Sabha elections in June, Maharashtra's assembly polls in November, and the US presidential election race. The Lok Sabha elections shocked investors as the BJP fell short of an absolute majority, causing Indian benchmark indices to crash over 6%. However, the BJP's strong comeback in the Maharashtra assembly elections brought some relief, signaling political stability in India's largest GDP contributing state. In the USA, across the pond, Donald Trump's return as the US president sent ripple through global markets. His threats of tariffs and tax cuts for the wealthies fueled gains in IT and pharma stocks, which benefited from a stronger dollar against a weaker rupee, since these are export-oriented sectors. The Union Budget for 2024 and 25 also made headlines with a strong focus on rural development and employment. But what shocked the markets even more was the unexpected tax hikes on STT rates on the derivatives increased, while LTCG and STCG taxes were raised to 12.5% and 20% respectively. Further, the Finance Ministry also removed the indexation benefit on real estate. While these measures were aimed to capitalize on the rally in the benchmark indices, they dampened investor sentiment in the short term. Now let's look at which stocks stole the spotlight in 2024. PSUs, railways and defense stocks saw massive rallies early in the year, but political uncertainty triggered sharp corrections in these sectors. Meanwhile, defensive sectors such as IT and pharma made a comeback, with indices surging 32% and 20% respectively following the elections. On the consumption front, rural areas did show green shoots of recovery, but urban demand remained stalled due to inflation and the RBI's crackdown on unsecured lending. This impacted FMCG giants such as HUL, Dabur, Nestle India and ITC, leaving investors disappointed. Further, overall, 2024 was not the year for large caps. Small caps and mid cap indices raced ahead of their blue chip peers, gaining up to 23% for the year, while we're seeing a 9 to 10% return from the Nifty 50 and the BSE Sensex. Foreign investors pulled out heavily in October due to China's stimulus measures, but they returned in December, ending the year as net buyers. Retail investors and domestic institutional investors, on the other hand, continue to pour in money into equities and mutual funds. SIP inflows continued to hit record highs, driving a 40% increase in equity AUMs compared to the last year. This reflects a growing shift in India's saving cultures, which is now trending towards financialization. Retail investors and DIIs kept the markets afloat in 2024, making Indian equities more resilient to persistent FII sell-offs. Also, this year, something really important to note is that the gap between FII holdings and DII holdings in the markets narrowed significantly, just as compared to a few quarters ago. The Reserve Bank of India kept everyone on their toes in 2024, cracking down on microfinance lending institutions, gold financiers, and even giants like Kotak Mahindra Bank and Paytm Payments Bank. From imposing various restrictions on Muthoot Finance, Manappuram Finance and IIFL Finance's gold loan businesses, from barring Kotak Mahindra Bank from onboarding new customers through its online and mobile banking channels, the RBI aimed to tighten compliance and protect consumers. However, the RBI's actions also created significant volatility in the markets. The year gone by was a record-breaking year for IPOs, with companies raising an astounding 1.6 lakh crore. It wasn't just the big numbers, but also the massive listing gains that had investors excited. From tech startups to auto giants, IPOs delivered listing gains of over 30% in many cases, making them the go-to opportunity for retail and institutional investors alike. On the global stage, the US Federal Reserve made headlines with its 3 rate cuts, providing a much-needed boost to the markets. However, the hawkish tone taken by Fed Chair Jerome Powell soured the sentiment towards the end of the year. As a result, the IT and pharma sectors are once again likely to benefit the most from rate cuts on a stronger dollar and increased demand for exports. As we come to wrap up 2024, one thing is clear. This year redefined market dynamics. From regulatory reforms to political shocks, the lessons we learned this year will shape our investment landscape for many more years to come.